to see my broker, find out what he can do, 'cause I'm in the market for you.
Welcome to Stock Talk Happy Hour, where we have casual conversations about stocks, the market, and trading with other traders.
You're going up, up, up in my estimation. I want 1,000 shares of your.
We're happy to have Jason D'Amore as today's guest trader.
The hugs and kisses when dividends are due, 'cause I'm in the market for you.
Thanks for coming on the show. I'm really glad you could do it. I know you're super busy.
Oh, yeah. Busy all the time.
I know.
Thanks so much for having me on.
Yeah, with all this, oh gosh, I spend so much time looking at stock charts. It's crazy. I'm just quickly alienating myself from all my friends and family.
It's the hardest thing to do is say no to the market, even when it's, you get to that time of night where you need to take a step away and try not to get burnt out all the time. But there's always something to learn, and there's always a way to improve yourself. So it's tough to say no to yourself.
The hardest thing for me is getting out of that darn chat room.
That's true. There's always good stuff. And sometimes, you know what, though, I've found is that the chat room's almost kind of an escape for me, because it's a chance where you're still in touch with what's going on at the market, but you get kind of a lighter feel. Mm-hmm. And you don't always have to feel like you're glued to the screen, or if you have positions on, you don't have to be glued to what's going on. You have your orders in place to kind of take care of stuff for you.
And not only that, it's great for helping realize that you're not alone. That the other traders are just as frustrated as you are, or that they're looking at the same stocks that you're looking at, like high quality stocks for position trades, or big volume, high liquidity stocks for day trading and swing. It's kind of validating in a way.
It's nice to know that someone else is doing the same things, and in a game where money and some of your hard-earned capital that you've gotten over time can vanish so quickly.
Oh, yeah.
To be able to know that there's other people out there that are seeing the same things, going through the same things, that this isn't just you who's making mistakes, or you who's, hitting, home runs or these singles and doubles along the way. Everyone else is doing the same things.
Absolutely. Well, let's dive in here. How long have you been trading, and can you give us a little trading history?
I have been trading since January of 2010. I remember my very first trade, and I remember buying Panera Bread. I bought maybe 40 shares or something like that of it. It was funny because the time that I had bought it was actually right when the market was starting to gain some strength, and it was still a little volatile, but things were starting to work well, and as far as growth stocks are concerned, and finding the leaders in the market. And I remember buying this stock, and I just sat there at the computer screen and stared at it the whole day and watched it go up and down and all over the place. And I have moving averages, and I have volume and other things in there to kind of help guide me, but none of that mattered whatsoever. If I was making $5 or losing $5, I was aware of every little bit.
That's hilarious.
And it's just crazy how over time your trading changes, and just your ability to kind of relax and not let your emotions take control. I was, fresh out of the gates. I had some background in being educated and investing, and I felt like, I could make millions doing this. And as soon as I had bought in my first position, it was like everything just went away and this emotional roller coaster started.
Yes, it's amazing how the emotions kick in, even for a small amount of capital.
Oh, yeah. The number one thing that no one, really goes through to start is they tell you all about your, the rules you need to have about buying stocks here or there, what's good value, what's not, and what to look for. But they never tell you all the feelings you're going to go through. And those feelings are so much stronger than anything else that could ever prepare you for trading.
I don't think people really understand the full impact and severity of greed, fear, and hope, as well as pride. Those are all really powerful emotions. It's just amazing to me. They're so subtle at times, and at other times they can be so overwhelming.
Yeah, you said it all. You surprise yourself. When I started trading, I started to learn all these things about myself that maybe I was aware of, but I never really had to face, because, there's other things you can go throughout your life and experiencing a day or two, and then it goes away and you don't come across that situation again. But if you have money working for you in the market, every day or every week or every month or however frequently you trade, and you get to learn a lot about yourself. And it's great, because there's nothing more humbling than the stock market. And,
So true. So
you know,
true.
it can really help you grow in other parts of your life too. So,
Well, now, what kind of trading do you do? You do day, swing, and position trading, right?
yeah, correct. And you know, it's been a process over time. Like I was kind of talking about, learning about myself and how I'm wired. You know, everyone out there has a different way that they trade and they can be successful. A lot of your personality creeps into your trading, and it's interesting as I don't want to say as I've aged, because hopefully I'm not too old yet, but you know, as you get older, things start to creep into your life, and you know, decisions you make, whether it's with family or having children or, you know, buying homes or all that type of stuff, that really influences your trading, and you can become a different trader and want to trade different ways based upon all these other outside influences. So when I first started trading, I was just buying growth stocks, or a position trader, and I would buy something that had a good looking technical pattern and some good fundamentals, and you know, I'd enter the position, and I had rules there to sell it if it hit certain percentages down from where I bought it, or it broke moving averages, or take profits on the way up at certain places. And then as I started to learn more and more about the markets, and at that particular point in my life, I became a little bit more of a fast twitch person. And I realized that, you know, I was very good at being on top of things and seeing different things occur. And so I kind of thought, you know, maybe I could get into a little bit more of the swing side of things and only trade things for maybe a few days or a week or two, instead of holding it for a few months or a year. And then as I got more and more into it, and I just started identifying the same type of things in shorter term charts, I started to get into the day thing as well. And so I'd say the biggest influence on depending upon which way I'm trading is the general market and what it's providing you. So there's great markets for position trading and buying growth stocks and holding on for hopefully years to come. And there's other markets that are great for swing trading, and sometimes where it's just best to not trade at all and sit on the sidelines. And if the market goes down 10% and your portfolio goes down 0%, you're still outperforming the market quite a bit.
I agree completely. There's really no one strategy that works fantastic in every market condition. I think every trader should plan on having a strategy for bull markets, bear markets, and sideways markets. I think we as traders have to adjust our approach to what the market is doing. That's the only way you can be successful, because you can't fight the market. It will crush you.
Oh, in a heartbeat. It does not care what you think whatsoever.
No.
It's really difficult for some people to understand that one particular strategy could be doing nothing.
That's right.
You know, when people hear strategy, they think, okay, well, what indicators do I have to use, or moving averages, or, you know, price is doing this, and what's the general market doing? There can literally be a strategy for you that says, if you're confused, or you don't know which way the market's going, or you're not prepared, that you just don't do anything, and you sit there and you take your time to collect yourself.
Being in cash can be a strategy in and of itself.
Yep, exactly.
And a lot of the great trend followers, that's what they do. They only trade the bull markets, then they go to cash when times are hard and preserve the bulk of their profit and wait for the next cycle to start.
You know, it's all, once again, all about knowing yourself and knowing your strengths. And unfortunately, that all comes at a price. There's no way you're going to understand all that right out of the gate. And you have to go in there and you have to get your hand burned a few times, and you have to have your ups and your downs to experience all that. Make sure that you know which strategy to use when the time presents itself.
Well, this is actually a good segue, all this talk about the market. What are your thoughts about the current market health?
Crazy, choppy, all over the place.
I mean, how do you
dangerous.
see the market unfolding right now?
I don't. That's one thing I've always tried to do is not predict. I just try to react, and you know, based upon what we've been going through for the last week and a half or so, and some of these crazy sell-offs and huge rebounds and stuff. You know, I'm expecting a whole lot of volatility, but whether we go up or down is still yet to be seen. I just know that I have to have a strategy in place and be prepared for whichever way we go.
We had recently 4 consecutive down days of over 1%, and we haven't seen that kind of a sell-off since 2009. We're definitely seeing a lot of volatility, a lot of selling. We could be on the cusp of a bear market. I try to anticipate what I'm going to do, if it should go up or if it should go down. I like to try to plan and have some kind of a hypothesis about where I think it might go and what I will do if it does what I expect or if it doesn't do what I expect.
You hit it right on the nose when you said we haven't had this type of move since 2009, and that, you know, that really was the last time we went through some type of meaningful correction that kind of wiped the slate clean, and we're very overdue for it, and maybe this is the start of it.
Well, what 2 or 3 things do you rely on the most to get a clear sense of market direction?
2 things that I really rely on the most are the institutional activity, just by watching the volume that is traded in the market, whether it's on the selling side or the buying side, to see where they're putting their money and how they're reacting to the general market day by day. And then also looking at leading stocks. So my version of leading stocks would be high beta names that are growth names that are very liquid, meaning more likely than not, they trade at least $40 million a day for their average daily dollar volume. And these are stocks that also technically look good as well. They're forming proper bases. They have high relative strength compared to the rest of the market. I'm looking to see how they react in turn with the current market conditions, whether the market's selling off and leading stocks are holding up, or the leading stocks start getting sold off before the market does. You can kind of tell with growth stocks as they lead the market up and they lead it down. And if you see growth stocks starting to collapse and starting to get sold off heavily and the market hasn't turned over yet, but it's just kind of sitting there going sideways, those leading growth stocks can kind of give you a clue that maybe the market's poised for some type of little pullback or the start of a bigger downtrend, just because those are the big names that the institutions are really drawn to and where they have a lot of their money.
Given the current market, in terms of your strategies, what is and isn't working? I mean, where do you think the trading opportunities are given the current market environment?
Given the current volatility, there is anything that's a position trade I would shy away from. In fact, I actually have a rule for myself about position trading and what the current market conditions need to be, and we're not in those conditions right now. The market isn't strong enough. It's too volatile and there's too much risk put on holding something overnight when the market can, jump down 4% or jump up 4% the next day. As far as swing trading is concerned, the possibility is there, but there is still a whole lot of risk, and you have to have a very loose leash on your stocks. You can't cut your losses short. And if you are going to give it a bigger leash, the position size has to be extremely small. At that point, you kind of ask yourself, is it really worth it to even be trading something of a position or swing if you have to make your position so small? So what's been working for me has been more on the day trading side of things, and just taking smaller gains along the way while they present themselves and limiting my risk to the downside as I enter that position.
Yeah, when the market's as volatile as it is right now, I try to focus on trading less, trading only the best, trading small, and just staying focused and disciplined.
Exactly. That's a strategy like we were talking about earlier that you have for this particular market. It's that based upon trading in the past and your experiences what works and what doesn't work, and not only in the general market but for yourself, and you just kind of have to play to that when the volatility gets a little bit bigger.
Did you have some slides you wanted to share? I see you have a document up.
This is something that I started a while ago, and I've transferred it to different computers and change things along the way as I kind of learn about myself. But currently, these are the type of questions I ask myself, and the ways that I consider either putting on a position or not putting on a position or selling a position, and just kind of some of the thoughts that go through my head.
Oh, those are great. I like what I'm seeing.
First off, the questions I ask myself, and this is whether I'm putting on trades or I'm not putting on trades, these are just things that I want to be aware of daily in the market.
Things to keep in the forefront of your mind while you're trading.
The bigger grand picture, kind of, what's sitting over the top of your head every time you're trying to make a decision, just so you're aware of the current environment.
Oh, that's great.
So, what is the market doing? Just simply, is it trending up or trending down? That could mean on a weekly basis. That could mean intraday. That could be over the last couple of months or over the last couple of years. But it's just something you always want to keep in mind. You always want to have the market, if you can, on your side when you're in a position, and being aware of where you are in the context of a longer uptrend, or even just one for a few hours or a few days, is always helpful for setting logical areas to take profits or to put stops in for your positions. Secondly, where's support and resistance? It's something I grew up with, and just understanding logically where stocks should find support or where stocks should find resistance is something that has just kind of been engraved in me from the beginning. So I'm always aware of that. And as far as support's concerned, it could be numerous amount of things. It could be price support, price bars. It could be moving averages. It could be a bunch of different indicators. And this is something that I'd encourage. It doesn't necessarily have to be, what I use. It could be, whatever you're most comfortable with, but just kind of understand more than anything where the range is for the stock. And there's thousands of different ways to go through that, but understanding where kind of a bottom and where a top is as far as the context of the stock move. So that's something that's big for me. And in that, how far away is the stock from major moving averages? That's that kind of ties in the same way. But once again, something I grew up on, so that's something I always take a look at.
Yes, moving averages can be incredibly helpful. I use them a lot in my trading. Not just the kind of the gross stock sell signal where if price is 100% or more above the 200-day moving average, but I also use it on lower time frames. If I see that the price makes a move and it's above 10% higher than the 9-day EMA, I'll take a little profit because it tells me it's getting stretched a little far. So
It's interesting you bring that up about taking profits on the way up there. I'll get into that a little bit when I get into the sell side, but someone asked me a question a few years ago that really made me think about myself, and they said, are you the type of person that would rather sell too early and wish that you were in that stock, or would you rather sell too late and wish that you were out of that stock?
that's a great question.
Like we talked earlier about understanding yourself and learning about yourself and what type of trader you are, and I think that's a big thing that'll tell you a whole lot about yourself. I know that I'm definitely the person that would rather sell too early wishing I was in the stock, because I know that those profits are mine and I can always buy that stock back later, or there might be another entry in it at some other time. But if I have profits that I let dwindle away and turn into a loss, or if it's a 20-25% gain that turns into a 5-10% loss, that can be pretty psychologically damaging for myself, and I can't try and go back in time and resell that stock.
I think everybody has a tendency to either be an offensive seller, selling into strength, or a defensive seller, selling into weakness. And I think it's really important that when a person tries to devise a trading strategy, especially when it comes to exit signals and triggers, that they really honor that. I personally I lean towards offensive selling. I'd rather sell into strength. And so I go out of my way to try to make sure that 50 to 75% of my selling is done as the stock's going up. And then I try to maybe hold on for another 25% of my position and sell that defensively, just in case I can catch another leg up that I might have missed. It's always much easier for people to go with what comes natural to them, I think.
I completely agree. I think one thing that's really big on that side of things is that I've seen this with a lot of folks and myself as well, is if you do become more of an offensive seller, it's very easy to sell something, watch it continue to move up and feel like you sold too early and start to chase the stock.
That's where discipline comes in.
Well, and it also comes, from a few times of doing that and from having your hand burnt and understanding that you don't do that because you put yourself at more risk and you don't have the advantage as the trader if that's the way you're going to go about buying stock. You need to make sure that you have an edge and that have the upper hand as that position's giving you an opportunity to enter it.
I notice you have how much room does this stock have to work? What do you mean by that on your list?
How much of a profit can I take away from this? When I say, or how much room does this trade have to work? If I'm buying Apple at $100 and Apple's ran up from $10 to $100, how much more can Apple really continue to move? And if it can't continue to move that much, and even if it's had some type of short-term consolidation, but it's already made a huge move, I have to be aware that maybe this doesn't have as much room as something that's only been an IPO for 6 months or a year or inside of 5 years and hasn't made as big of a move. So it just kind of really helps me set my realistic profit goals along the way.
Aside from reward, you look at the risk.
I do. It's something that I learned a lot early on. I used to buy a lot of stocks that looked very sound technically, but my risk to the downside if anything went wrong seemed to always kind of run in right around the 50-day moving average. I grew up investing and learning that I shouldn't have any double-digit losses as far as trading's concerned, and a lot of the times I was buying stocks, if they came down and got somewhere near that double-digit range, it was right around the 50-day moving average, and having to eat the double-digit loss just to see if it works out was not something that I had a whole lot of interest in. So after some time and going through all that, I was able to kind of decipher what's the better risk for myself.
Gosh, I don't blame you having to ride something all the way down to the 50. That's far too great a risk for me. I think one of the biggest challenges that traders face is understanding the difference and the importance of a low risk trade, having small risk, and then having well-defined risk, because they're not all the same thing. They're all slightly different. And risk management is the key to being a successful trader.
Without a doubt. I mean, there's no way that you can, you have to make sure that when you're wrong small, and when you're right big. And all it takes is, I don't have the percentages up in front of me, but you lose 50% on something, you got to make some pretty big gains back just to get back to even. and you can't afford to dig yourself these big holes, and then you're always fighting from the defensive position trying to get back to just where you were. And that's no way to be trading, and there's no way to have an advantage if that's the way you're going to be going about it.
Yeah. Well, we're practically talking about strategy now, so we can go ahead and jump into that. Can you give us the overall idea behind one of the strategies that you use and why you think it works so well, especially right now in the current market conditions?
The strategy that I use that I've had the most success with does not work in this current market, and it's something that requires, it's from the position side, and it requires a little bit more patience, and this is not a market that you can really have patience with. So as far as position trading with growth stocks, it's something that I'm just not doing right now. But the strategy in this current market that has worked the best for me has been on the day trading side of things. And quite a few of the things that I have here are things that I go through on daily basis when I am day trading, whether I decide to trade that day or not, based on what the market's giving me. But it's playing to my percentages, playing to my strengths. I do a lot of calculations about the places I buy stocks, why I buy them, what type of technical pattern it was forming, what percentage of the time that's a winner versus a loser, whether that would be a stock or that would be an index ETF or something like that, holding something, overnight. There's all kinds of, pre-market, post-market, all that stuff. And so the strategy for me at this current time that's worked the best has been day trading with growth names. And it's either been to the short side as something has had a big move up and it's tired and it's ready for a rest, or something, maybe the market has a really nice day up and something's gained some momentum and it's had a little pullback, or it's had a place that gives me a good technical entry and I get into that. So these are some of the questions that I go through, and the reasons that I buy stocks or the reasons that I sell stocks.
So mostly you're basically day trading overbought and oversold conditions, and obviously going short on overbought and long on oversold.
Correct. There are times where I will buy something. Indicators might be telling me that this is overbought, but it's giving me, good amount of volume and it's breaking through an area of resistance, and the market's strong, and based upon my percentages of being profitable in stocks, my risk might be very small. And I know that this stock, if it gets through this resistance, might have a big burst and might yield me profit of, I might only be looking for 1% or 2% or 3%. And if it can give me that fairly quickly, I might just take my money that way as well.
I know you also like to trade new highs quite a bit.
I do. I like to trade things that are breaking through resistance, generally because there's a reason why it's resistance. And if, the big boys and the institutions are willing to pay the price for the stock above where they weren't beforehand, it generally creates a little bit of crowded trading, and we get a whole lot of institutions getting in there to buy the stock. It's funny, the institutions are the ones who have all the money, but they think the exact same way that you and I think, and they don't want to be left behind in a position, and they get in late or they get in too early. They go through the exact same emotions and trials and tribulations that we do as well.
Are there any particular indicators or oscillators or certain way that you set up your chart that you find really helpful for you while you trade?
I think the number one thing is to realize that you're going to go through different types of charts, different types of indicators, and in different markets too. There might be a really strong market, and I might be position trading and using a chart like I have here of Facebook that just has price and volume bars with 3 moving averages and some volume at the bottom. And that might be in a strong market where growth stocks are working really well. And then I might have a market that's a little bit more volatile, and I might go, throw some MACD in there. I might throw, some Bollinger Bands, whatever it may be, to try and get a little bit better idea. And that's just based upon my experience with trading and what's worked well for me.
Everyone sees information differently, and so you have to play into your strengths by setting up those charts in a way that facilitates rather than hinders.
Couldn't agree more. And it does take some time.
That's a really good point. I really like that, not being afraid to adjust your charts to the conditions and whatever it is you happen to be trading at the time.
And the only reason that I do that is based upon the success that I've had. Once again, it's trying to learn about myself and how, I trade best. And that's through some trials, and that's through understanding where my percentages come from and what my personality is made for. And that's what I figured out along the way.
One thing I really like about your chart is is exactly how simple it is. It's nice to have a clean chart and not try to complicate things. I think a lot of times people who are new to trading try to put too many bells and whistles on the chart.
Oh, there's plenty of bells and whistles, we know that.
That's so true. So, how are you selecting your candidates?
The way I go through finding my stocks is by using something called MarketSmith. And they screen for growth stocks. They have a bunch of different parameters you can go through. But what I do, and let me pull up the panel down here at the bottom, is I look for a lot of stocks that I like higher price names. I like something that trades generally over $15, if not 20. I like something that's liquid, maybe has 400,000 shares traded daily at least, and if not that, I need the dollar volume be upwards of $40 million or so a day coming in and out of that stock. And the biggest reason that I look for that is because I want to make sure that institutions are able to trade within that name. When something doesn't have a whole lot of volume coming into it, or it doesn't have a whole lot of dollar volume coming into it, it's very difficult for the big guys to trade. And they're the ones who rule the way the markets work. And so I want to follow their footsteps in and follow their footsteps out. And so that's a big reason I go about it that way. But as far as how I identify the stocks I want to look at, I come into MarketSmith here and there's a bunch of different ways I can go through screening for stocks. One of my favorite things to do, and I do this every day, is I come over here to the left-hand side, and on the screener tab, I click on MarketSmith stock screens. And I love to look at the up on volume screen.
That's one of my favorite screens too. I also have MarketSmith.
What I love about the up on volume screen is that, there's always someone out there who's saying institutions never tell you on a daily basis what they're doing with their money and if they're buying or selling a stock. Well, they do, and they tell you with the volume. There's no way that all of us retail, traders out there are able to come in and produce the type of volume that institution can. And especially when you see not one institution, but 100 or a couple hundred all reacting the same way to a stock, that really gives you a big indication of what these guys are doing. And they're buying shares to hold for an extended period of time generally, whether that extended period of time is throughout the rest of the day if you're day trading, or throughout the rest of the month or the year if you're position trading.
For sure, institutions are the ones who push the stocks up. The footprint they leave behind is in volume. They can't hide their volume.
They're just too big. They have too much money.
So what kind of risk reward, what kind of percent or points are you usually looking to take? What's your methodology or process for determining how much profit potential a trade might have?
When I look at something like Dicom here, this is a stock that was up on big volume. I sit here and say this stock has just moved from roughly $20 up to $67 within the last 2.5 years or so. So, it's had a couple 100% move. Not absolutely crazy because we have been in a bull market that's been yielding some big winners, but this stock's made a big move. So realistically, how much can I really expect from this stock? Well, I'd probably be more inclined to take my profits at 20 to 25% in this stock, just because I know historically that's a place where stocks will start to correct or maybe have some type of pullback or formed a new, basing pattern. Whereas if I was in something that was a little bit fresher, or maybe it had just gone through a deeper correction and it was coming out of that with some strength, I might be more inclined to look to a longer term profit goal. But, with where we are in this current market right now, it's very rare that you're going to find a whole lot of stocks that haven't made a big move yet. And if they haven't made a big move while the market's going up, you kind of want to ask yourself the question of why. And what did institutions not see in them to be buying up those stocks as they were buying up the rest of the market? So a lot of it's based upon what the current market's doing.
That's a very good point. Now, what about swing and day trades? How do you determine the potential profit in those?
In swing trades, something that's big for me that you kind of mentioned earlier actually was when stocks start getting extended from moving averages. I can see here, Dicom, for example, say that, this was a stock that came down to support right here at the 200-day moving average, and there wasn't a whole lot of huge volume coming into it. It was a place where it found support before. Say this is a place where I wanted to try some shares, and I knew that my risk was small. Maybe I was just going to give it to the low of this over here, or I was going to wait until it broke the 200-day moving average, closed underneath it. I have some small risk. As I get into this, first of all, dependent upon the position size or how much exposure I have to the current market, That'll give me a big determination on how much I'm really looking for. But for the most part, when I'm swing trading, if I can get 10% on a swing trade, I feel like that's a pretty good profit for me.
I think that's a great profit.
But it's also based upon the stock too, right? This is something that trades 376,000 shares a day, and right now it's a $67 price stock. Down here, if it's trading 367,000 shares and it's a $30 stock, I know there's not really a whole lot of money coming into the stock on a daily basis. So the probability of it having a bigger swing is more likely. It's going to be more affected by institutional type orders coming into it. So 10% is big. Generally, when I see something that gets, if it gets 10% above the 10-day moving average, the green line, I would definitely be taking some profits. But more than likely than not, when it gets 5% above the 10-day, it really gets my attention. And I really want to see if this stock is extended or, if this is just coming up to a place where it could break out again. There's other things like right here, this 36.58. I know that this should be acting as some type of resistance in this stock as it's coming back up. So if it starts to hit its head on that, maybe it's only 2 or 3% above the 10-day. But if it ends up, hitting its head on this resistance and I've got a 5 or 6% gain, I wouldn't have a problem taking the profit there either.
So you wouldn't sit through that short consolidation. You'd go ahead and ring the register on that swing trade.
For a swing, yes. If I'm holding through this consolidation or sitting through it, it's no longer a swing trade. Now it's a position trade, and I need to adjust my profit goals accordingly.
Yeah, everybody kind of defines a swing trade different. Some will say I swing trade, and they mean they just hold for 2 or 3 days. Other people, 2 or 3 weeks for a swing trade. What about day trades? What kind of profit expectations do you have on a day trade?
This is a 5-minute chart of Amazon. And generally when I'm day trading, I like to stick with big names. I like to stick with things that have big market caps. They're very liquid. They're ones that generally their moves can only be affected by the institutions on an intraday basis as well, not only a long-term basis. It's also much easier generally to day trade these because the patterns that they form are a little bit smoother and the trends that they have last a little bit longer. They're not as herky-jerky. They're not as choppy. It's a little bit easier to identify the trends. Different ways that you could, go through trends. I like to use trend lines a lot, and that's just a big way that I go about determining whether or not the stock is finding a bottom or finding a top. And you can see in this particular 3.5 day window we have here of Amazon, there's some pretty defined trends. For example, the first move off the bottom we're looking at here, this is on the 24th. This stock comes off the bottom, has a huge move, and you can see very clearly in here it has a defined trend it's moving up in. Now, when it breaks that trend to the downside, I might be entering a short position in there. If this stock now starts forming this downtrend, and I'm looking to see if it breaks that, either a place to cover a short or a place to enter a long for profits, there's another trend that it's going within, or we have another one moving here to the upside. So generally, I'm looking at trends within the stock on a daily basis. There's other indicators I might use along the way, but for the most part, I like to try and keep it as simple as possible. Once again, it was just kind of how I grew up trading, and it's what my eyes see, which makes it easiest for me to be profitable.
Well, I think the simpler the better. You can never go wrong keeping things simple. Do you find that when you trade the trend lines that it prevents you from being whipped around?
Yeah, I think that's a good way to put it. I think and it also depends, on what type of trend I'm talking about. Very easily I could have drawn a trend from here over this low and said that this stock didn't break the trend until somewhere over in here, and I would have been holding this for a longer period of time. But when you're day trading, generally you don't want to give the stock the entire day to, break a trend. You want to be a little bit more actionable as you can. But for example, I think in this little uptrend we have right here, this bar in particular would give me some reason for concern because the stock tried to go higher, but it couldn't, and it basically closed at the same range again, and there's some type of stalling action going on. But as long as I have that trend line intact and I know that that's a place it should normally come back to and find some support, I have no reason to act on it, and I can just kind of sit on my hands and let the trends or let my stops and let my rules kind of act for me and not let my emotions get into play.
Could you pull up another chart, maybe one where you show how you would trade one of the new highs? Because I know that's a strategy that you like. Even as a day trade, you like the new high breakouts.
Even this would even work over here with Amazon. This is a little bit longer time frame, but there's no reason, and I've found many successes in the past with, if this is a line of resistance right here for Amazon earlier on in the day, and now, it takes its time and maybe the market pulls back for the day and tries to get some momentum or whatever, this might be a place right here where I would try some of Amazon. And I know that when this stock breaks through it, just pure support and resistance rules, what used to be resistance should turn into support. So I would probably drag this line actually going through this, continuing a little bit longer. And if this stock has a nice move up, if it gives me a substantial profit in the first, little burst up it has here, I could take profits. Otherwise, I know that it's completely normal for it to pull back to this used to be resistance and now support area, and it does, and then continues to go higher there. So it's the same way as if I would be trading a growth stock on a position, type of trade, holding it for weeks or months or a year or something like that. And it doesn't necessarily have to be an all-time high for the day. We were talking about new highs. It could be a new high simply, maybe something right here. I just like to call them breakouts. But basically, when a stock is breaking through some type of resistance level, showing that institutions are willing to pay more for the stock than they were, a short time ago, and whether that's within the last 4 hours or within the last hour and a half, both of these would be places that I would look to enter a trade because the stock's changed its character and it's moving past a price that it wouldn't move past before.
So your specific entry process, with some examples, would be breaking the trend line or breaking through resistance or moving above a recent consolidation area when you're day trading. How would you differentiate between a good setup and a great setup?
The reason I see something as a good setup versus a great setup is based upon just the type of setup it is. I know that I have a very high success rate of being profitable in a trade if I trade something that's going through some type of resistance or it's breaking out and taking my profits maybe 1%, 2%, 3% up along the way. Whereas if I have something that's a trend line or I'm trying to, for example, this right here might look like a low to me, and I might want to try some in here trying to find a low, and I might put my stop at the low of that bar, but it doesn't work out and then it continues to come down. This might not be as good of a setup to me as this might be, just because my eyes are trained to seeing strength and wanting the proof that, there really is some strength behind it. I would say good to great would just be based upon the percentage of success that I have with that particular pattern, and getting past resistance is something that's a great setup for my eyes. It doesn't mean it's necessarily a great setup that's going to work for that stock in that time, or that it's going to work for, anyone else. It's just over time, when I go through all of my trades, I'm the most successful when I trade these type of setups.
So do you find that during certain times of the day, a new high strategy works better than others? Would that be one thing that might differentiate a good trade from a great trade? So say if you reached a new high early in the day versus late in the day, something like that?
Sure. Yeah. Well, you tend to see that the market really makes its moves, as far as West Coast time is concerned, before 9 o'clock in the morning, and then you usually have some type of lack of momentum sometime between 9 and 10:30, and then around 10:30 things kind of start to steamroll again. That could either be to the upside or the downside. So I would say if I was trying something hitting new highs, I would be more inclined to try something maybe between 7:15 and 8:30 in the morning than I would be to try something at 9:30 or 9:45. Same thing in the afternoon, and 11 or 11:15 would probably be more appealing than a 9:30, 9:45.
As far as your initial stops, where do you normally like to put them when you're trading either one of these?
The stop is based upon the position size. I have a certain percentage of my capital that I'm putting into each position based upon how I'm doing for the day or how I'm doing for the month or the year, based upon how far this stock is from some type of support level. This example right here in Amazon and this entry is a place that I would love to get into it, because I know that this stock should find some support here, or it should find some support here. If it doesn't find support either one of these places, it's really starting to get weak. I don't want to be in this name, at least to the long side. Normally, I try to look for some type of technical support as far as a place to put my stop. And if I can't find any technical support and the risk is too great, I'm trying this stock at 492.57, and the first place of support is all the way down here at 479, and there's 13 points. How much can I really buy of this stock and still find some profit on the upside and not expose myself to a lot of risk on the downside? So that's a big part of these entries as well, that I do put myself at higher risk sometimes to the downside in these trading new highs. And, I have to be aware of that and see if there is maybe some shorter term support like I have right in here that I can use.
It sounds like, though, that you clearly define your risk and you mitigate that risk by adjusting your position size.
If this is a higher risk entry, this might not be as big of a position, whereas down here I might be willing to put a little bit more into it.
You just put it a little bit below the trend line for your stop.
Yeah, let's say right here, I'm in Amazon to the upside here, and it keeps finding support at this trend along the way. I'd probably have my stop in there. This is a big price stock, so I might put my stop in there 10 cents underneath wherever that trend line is. Whereas if I'm in something that's only a $40 stock, it might be 3 cents or 4 cents. It's all kind of based upon the price of the stock and the liquidity, but it's very shortly underneath it. Once again, I'd rather be shaken out a little bit early in something than hold on to it too long and then be getting out of it too late.
So if you get stopped out, where would you re-enter?
Generally, I'd like to wait for another setup before I get back into the stock. I've found with myself, if I'm day trading something, and for example, we'll say here in this uptrend in Amazon, if this stock just comes underneath the trend a little bit and somehow it shakes me out, I don't want to try and jump right back in right away. Now I have no cushion on the stock. I'm not coming from a place of power. I don't have any advantage. It's an awkward place for me. I'd want the stock to maybe come back down, form a new trend, and give me a new place to get into it. I wouldn't be re-entering too quickly just because of the volatility that can occur in day trading.
Okay, well, can you punch up Netflix?
So, right off the bat, this right here in the beginning of the day is something that catches my attention. And the reason that it catches my attention is because this stock has had a really strong move up. It pulls back for a short period of time, and it's starting to make a move again. This is a higher risk entry, and I know it, but I also know what happens in the morning and how the market can move. Now, the time of this is 7:05 West Coast time, 10:05 Eastern. So this is probably not something that I would try. It's still pretty early on. It's very easy that this could be some type of fake out and the stock could come back. If this was 7:15, 7:20 and it had that type of look, that's something that I would probably try. But from here, you can see the stock does make a really nice move up. And this was on Monday, the 24th. So this is actually a time where the market was really having a huge move up in the morning. This is really jumping out at me as well. This is a very clear place of resistance. What I like about this little sort of base right here that the stock forms is that it comes down once, and right here it has 2 bars down, about 10 minutes worth of a shakeout. The stock rallies back up. It can't get back up to that high. It finds some resistance, but when it comes back down again to take a break, it doesn't undercut that first low. And I really like that because someone is coming in there, or quite possibly quite a few big funds are coming in there and supporting the stock at a higher price than they were before. So it's showing some type of strength. Now, if I wanted to and I wanted to be aggressive, I could try the stock as it goes through this high right here. Probably more likely than not, I'm going to wait for the higher high up here just because of the pullback. And this is a little bit more severe. This thing had a move up here from 102.27 down to 97. I mean, it's almost a 4.5% move in about 10 minutes. That's a pretty severe pullback there that I would like to wait for a little bit more confirmation. So I'd probably be buying the stock up here. And I realize that that might reduce my profit a little bit on the upside if the stock doesn't have a huge move. But at the same time, I just feel like my risk is less.
How would you have traded the 26th? Would you have just used a break of the downtrend line for a possible entry?
Yeah, well, I kind of like this right here. I like that Netflix came down here and found some support, and then it came down to the same area again and found some support. So at this area, this is another setup that I like, that I don't have as high of a percentage on as trading new highs, but it's still better than 50%. This stock has come down, found a low. It came down again, didn't undercut that low. So now I would kind of be looking to see if it can get past that first high and really change the trend by creating higher lows and higher highs. So when it comes through this high right here, I would probably be trying this stock.
Where would you add, or would you at all, to a position that was moving in your favor?
With day trading, I don't add as much, and that's just me. It's just the way that I've gone through it and the success that I've had. I've just been better at getting into one position and taking my profits. I'm probably a little bit more active than most people are on the day trading side with how many shares or how many trades I put through. So that's just not something I would do on the day trading side. And it could just be because of the experience I have with day trading that I don't have as much as I do with growth position trading. And it's a little bit easier for me to add in that place.
Is it the same for swing trading too then? You'll add to your position trades, but not to your swing or your day trades normally?
Yeah, I'd say that's pretty accurate.
If a trade moves in your favor, will you move, especially when we're talking about day trading because that's what's working right now, would you move your initial stops up to break even at some point? And if so, when would that be under normal circumstances?
And this might be a bad example because we don't have moving averages on here, but this is something where, Netflix works for me kind of right here at 104. And for a few minutes, it kind of pulls back off that high, but it doesn't, it's not really that big of a pullback. It's not violating any other lows and stuff, and it's just kind of taking a break. When it starts to make a move up here, if I get a % gain on this stock for a day trade, I'm definitely going to move my my stop back to break even.
Is there a specific percentage up that you say, okay, now I'm going to take profit no matter what it's doing? I'm going to take a little bit off the table?
I would say the first time that it enters my head that I would like to take profits is when I have a 2% gain. And when it does, depending upon the stock, I might have a trigger in there already. I might have a limit sell order that if it, if I bought it at 104 and if it gets to 106.08 and gives me exactly what I'm looking for 2%, I might have an order in there that just sells it automatically. Once again, I would say a lot of that depends upon what's going on with the market for the day and how I'm doing for the day or how I'm doing for the year, if I'm profitable or not. But yeah, the 2% is really the first place that it starts becoming, hey, this is a good place to lock in some profits. There's nothing wrong with taking a 2% gain when you're day trading. That would be the first place. And then other than that would be some type of support or a moving average.
Do you normally scale out of a position?
I try to. I mean, it's something that I'm always conscious of. I wouldn't say I'm as good at doing it as I am at planning it.
It seems to me that a lot of day traders, they tend to go all in with their entries and scale out on their exits. Do you go all in on your entries as well?
Day trading, I definitely do. It's very rare that I would scale in on a swing trade, but on position trading, I always scale in, just because it's a bigger percentage of capital generally that I'm giving.
If this trade that you have, say you've already taken a partial profit, it turns out to be a pretty good winner, what kind of trailing stop would you use? Say you're up 2 or 3 points and the trend looks strong for intraday.
The stop that I would be using to the downside would be a moving average, or it would be some type of support. It wouldn't necessarily be a trailing stop off of the top or anything like that. So looking at Netflix here, the lines we're drawing, there's obviously some support right here, this low. And so we were kind of talking about trying the stock when it goes through this area right here as it's trying to create a higher high. So I would be in this stock. Now on here, I have a 10, a 21, and a 50, the same things I would be using on a daily chart. And as this stock starts to move up from our high around 104, 103.96 would probably be an entry. And it gets up here and we start getting up to 105.97. So I'm up 2% on this stock. So this is a place right in here that I would maybe be considering taking profits, especially with the volatility in this market. If I'm taking something, 2%, this can turn around and go down 4% very quickly. So I would probably be taking at least partial profits here. And then I'd probably be using that 10 or the green line as my guide as a place to take the rest of the profits. That would be in this market.
Does it have to just violate the line or does it have to close below the line?
Closing below it would be best. There's as much as I'd like to give the institutions credit for being able to actually maintain the price right on the line, there's times where things can slip underneath and shake out and then come back above. So this right here would probably be my my exit position on this day trade.
I know a lot of traders who, when they do a day trade or even a swing trade, whatever they risk, they'll take partial profits. So if your initial stop was $3, when they're up $3, they'll sell half their position and then let the other half ride. Do you do something like that?
I try to make it a little bit more like 2 to 1 or even 3 to 1 if I can. So if I was risking $1 to the downside, then $2 would be where I would think about taking profits, or $3. If I was risking 3 to the downside, I, I mean, first off, I wouldn't be risking that much, I don't think, because to get that type of a move in this stock, I would have to be holding on for too long of a time period. But even if I was only risking 1 to the downside, generally I like to look for 2% or doubling that risk before I start thinking about capitalizing on my reward.
So for you, the best way to manage this trade is to shoot for a 2 to 1, risk 1, reward 2, then take some profits.
Correct. And identifying that before I even make the trade about where the risk really is. And if it is more than 1, then, maybe this isn't the right setup for me yet, or maybe I already missed it, or I need to move on to the next name. But if it is there and it's got all the components that I want and the chart looks good, then from there I have no problem putting it on.
Well, given your experience with these type of strategies, do you find that it's better to be more patient or less patient if the stock isn't really moving? Say it's not necessarily moving against you, but it's not moving in your direction or in your favor. Will you get out of a stock, or do you just wait for your stop to be hit?
With day trading, once again, like we talked about earlier, because of the type of personality I have, I would rather take the profits too early. So I'd rather be less patient than be too patient. Just my makeup, and it's something I always try to work on, but I have a difficult time having a fairly substantial profit and giving it back. I would rather take that profit, miss out on some of the rest of the trade, and then wait for the next thing to pop up, another setup. Because once again, I'm just trying to it's percentages for me, and I'm just trying to put the odds in my favor. And if I know, say I'm right 50% of the time on my trades, and I know that I'm losing 1 and I'm making 2 on those 50%, I'm always coming out on top, at least with a +1. That I know consistently I'm making money, and consistently I'm ahead of the game.
So it sounds like, you use that 1 to 2 ratio as a static exit, and then you use the moving average as a dynamic exit. And I'm assuming that you're using that moving average as a way to let at least part of your position let those profits run.
Yeah, exactly. It's the same terminology that I would be applying to a longer term growth position trade. It's just that now you're doing it on an hourly basis or on a minute by minute basis, but it still should be acting the same way. I look at this right here. There's some people that might get into this stock and think, that by the time the stock's pulled back right here, it's gone from 106.14 all the way down to 104.26. You almost give back 2% off of the top. And the stock does something completely natural. It comes right back to a place that used to be resistance. It finds support on a moving average as well, and then from there continues to move up. So, maybe I had gotten the stock somewhere else earlier during the day and I had a bigger cushion on it, then I would probably be getting past that 10, even the 21. Maybe I'd give it to the 50. Or if I'd already taken profits and I'm giving some extra room to the downside. There's always, when stocks find bottoms and stocks find tops, you can always kind of find a reason of some type of prior price action that gives you that identity.
After you take those partial profits, say you sell half your position, will you go ahead and move your stop up to break even, or how will you change your stop?
When I'm buying something, our initial entry, say, was right here. If as soon as I get 1% on this stock, I'm coming back up to break even as far as my stop's concerned. I'm trying to move up with the stock, and you'll see more often than not, break even is even below where there should be support in this stock. This thing breaks through the place I'm looking to get into it. It goes up 1.5% here in the first, 30 minutes or so. I have, a 10, a 50, and a 21 very slowly creeping up that are all going to be above that break-even point. So the break-even is really the last line in the sand, and I'm confident moving that up because there's other places of support even before it.
So your trailing stop, in essence, is kind of an emergency stop.
Yeah, kind of a last resort type of thing.
How much profit in general are you willing to give back before you'll take that final exit?
100% is the absolute max. First off, I never want to let any type of, and when I say a substantial profit, anything that's a percent or more, I never want to let that turn into a loss. Especially if that happens 2 or 3 times throughout a day, it really just starts to drag on you. A percent on a 1% gain or a percent on a 2% gain would be what I'm willing to give back. If I start getting to, 3 or 4% gain and then I get back to break even, I didn't follow my rules there. And there's no way, if I have my stops set in place with my moving averages, and moving up my stop along the way. There's no way that that should ever happen. That's what I would probably be comfortable with, but what realistically should be happening is never more than 50% of what I've made on the way up.
I know from talking to you before that you do some incredible post-analysis. You want to maybe tell us a little bit about what you do and about that process?
Sure. What I do is I try to measure my success, measure the type of trades that work best for me. And I try to, if I can, if I'm really on top of my stuff, is take a screenshot or snip every trade that I make, whether that's a day trade or a swing trade, position trade, always trying to understand where I bought something, why I bought something, if my entry was good or bad, or the same thing with the exits, just because there's so many times that your normal personal life can creep into your trading. And you want to make sure that you're actually staying in tune with your rules. You're staying in tune with what, the market's doing. You're not just wandering off somewhere, getting out of your routine and getting out of your rules. So the way that I go through my post analysis is that I will go through all the stocks I've had that are winners, all the stocks that I've had that are losers. I will look at my entries. I'll look at my exits, whether they were good or they were bad. I'll look at whether I was trading a stock or I was trading an index ETF and what my percentages are with that. It's really easy to think the market's turning and doing this, so I should be buying this ETF, or the market turned back this way, so I should be buying this ETF. But there's a bunch of different ways to kind of figure out what you're really good at. So I know, for example, within the last month, when I've been doing some studying of myself, I've figured out that when I buy stocks that are breaking out, hitting new highs, whether it's kind of within a base, a high, or it's an all-time new high for the day, if I'm trading a stock that's doing that, I'm right 78% of the time, and I'm profitable 78% of the time.
You're doing at least a risk of 1 and a reward of 2 on most of those trades, right?
Yeah. And there might be a time where if I might buy something and it might go up 1%, and then it just might move slowly or something, and it breaks through a moving average, and I only get a 0.5% out of it. But I followed all my rules. I bought it properly. I came out of the trade profitable. Those are things that I'm counting as successes.
That's outstanding. And I'm a firm believer that even if a person loses money, that's not necessarily a mistake. If they followed all the rules, then in my mind, even though the trade didn't make money, they should get a pat on the back for being disciplined and following their plan.
No, I agree. I have my winners and my losses recorded. Was it a good buy or was it a poor buy? Was it a good sell or was it a poor sell? And if it was a good sell, what did I do about it that followed my rules? And was there something I could have done differently to not make that a loss? Or was this just a trade that didn't go in my favor and it's just the way the market works and no one's going to be right 100% of the time? But am I following my routine? Am I staying consistent to what I'm trying to do to be profitable?
Well, as you've looked back on your post-analysis, what would you say 1 or 2 mistakes or trade mismanagements or errors are responsible for your biggest losses or your most consistent losses? Have you noticed a pattern in your own trading?
The percentage of losses is greatest from trading index ETFs instead of just trading stocks. And the biggest losses come from not having stops in place or not following my rules. And a lot of that stuff is under control and not things that I've gone through in the past. Index ETFs, trading pre-market or after hours, or just trading a setup that doesn't look good to me. It's something that I know there's a high probability of this trade working out, but maybe I'm just not the type of person that has confidence in that type of setup and my eyes aren't drawn to it. And maybe then I get a little bit too active and I sell something too early, or I try and wait on it and then I sell it too late and I'm not following my rules. The biggest problem I think I could get into is just not letting my plan for the trade actually work for me. I stop trading my plan and I plan this trade ahead of time and then I do something completely different.
The biggest challenges that most traders face with losses, of course, is frequency and severity. Most people control that severity with stops. My biggest losses have occurred when I haven't had my stops. And as far as frequency, it ties into what you say about trading setups that maybe aren't as good as you would normally want or expect. And I think a lot can be said for trading only the very best setups. I think that can have a tremendously positive impact on every trader's bottom line. And another common problem that I've seen is choking the trade. I think that is one of the biggest mistakes I see a lot of traders make, is they get nervous or they're afraid that, the profits they made are going to go away, and then they choke the trade, and then it goes up, 5 more points without them. I've done that on more occasions than I can count, and it's something that I constantly work on.
I agree. I do it all the time. I have a very hard time giving back the gains I've made. And I've, as you would say, choked the trade, very often, I'm sure. And it's just something that takes some time and takes some experience and takes a little getting used to be comfortable with it. And a lot of it also too is, current market conditions and stuff like that. There's going to be easier times where it is, it's not that hard to sit back and just kind of let things, make their move and whatnot. And there's going to be other times where the market whipsaws back and forth. And a lot of it, I think, is based upon your goals. If your goal for the day is to have one trade that you make 1% on, and you do that, you can't be upset with that. But if there's a potential to make a whole lot more money than that, then maybe you need to adjust your goals a little bit.
With that in mind, what are your biggest winners or your most, we know your most winners come from new highs, but what would you like your biggest winners, especially in terms of day and swing trading, since that's what's working right now in the market? What do they have in common? And especially in terms of trade management, do you notice any commonalities?
The biggest winners have a couple of things in common. They are the best stocks, meaning that they have great fundamentals, they technically look good on a chart, and they're also liquid. They're things that institutions are trading. I'm not trying a stock that trades 200,000 shares a day and is a $20 stock, because I know there's not a whole lot of money going in and out of that stock. Now, there might be opportunity for profit on the upside, but just for my goal to be profitable in the market, it's not a setup and not a scenario that would be best for me. So liquidity and trading the best names. You have your Netflixes and your Amazons and your Googles and Apples and Facebooks and, the names that have really led the market up and are the true leaders that have the biggest percentage gains in a bull market. Trading those stocks and, looking for my type of setup is what has led to the biggest wins I've had.
I think basically you're saying that the reason, especially the new high strategy and other day trades that you have are so successful is because you're focusing in on those institutional quality stocks. Trading can be really stressful, and it's probably one of the most overlooked aspects of trading is your psychological capital and your fitness. So is there anything that you do while you're trading that helps you keep your emotions like hope, greed, fear, pride, things like that in check? Is there anything that you do that helps you maintain your psychological capital and especially your emotional resistance as you're trading through a rough day?
If I get to a certain loss for the day, I can't trade anymore. If I have a certain size position, I can't trade anything else. As far as my psychological and just even physical health, I always try to get up at some point throughout the day and go for a walk and walk around, or if there's just not really much going on, or maybe things aren't going so well. Generally during that kind of lunchtime low, I might just turn the computer off and go hop on my bike and go for a bike ride for a half an hour, 45 minutes, and come back and try and get a fresh mindset. But I always try to make sure, it's a job that you have to take breaks just like you would in any other job. And you can't sit there and stay glued all day. You have to walk around and you have to, get something to eat and stuff like that. And there has to be a routine in place. So going outside is big. I've had days where I haven't gotten up and haven't gotten outside. And by the time the market closes, I'm just an absolute wreck. And I need to be out. You need to have a fresh mind. You need to be thinking straight. And that's a big part of it. Moving around, whether it's even my house, just making sure that you're active, that you're not always sedentary in one place the whole time is something that really helps me psychologically, along with taking breaks throughout the day when I know there's general just kind of down times in the market.
I try to also do that, and I also try to drink a lot of water. It keeps the oxygen up high, and if I'm sitting at my desk for a long period of time and I can't get up because I have a trade on, I'll do some leg extensions in my chair, some kind of ab work or something.
That sounds good.
Let me ask you this. On days when you're having an off day or times when you're having an off day, is there a reoccurring theme like not getting enough sleep, or is your position size too large? Have you noticed any kind of trends in the off days for you?
I wouldn't say it necessarily comes down to those type of things. I'd say more along the lines of over trading, of pushing, of trying to do too much.
Maybe trying to force the trade?
Yeah, maybe trying to see something that isn't there. I mean, I think it's really easy. It's a natural human emotion to have a losing trade and right away feel like you want revenge, or that you need to, get that money back, that you need to be, you need to be active and you need to go find that money somewhere else and get even, in a sense. That's a very normal human reaction to have. But I think once you realize, I've realized, like we said earlier, if I'm only right half of the time, I'm going to be extremely profitable. Means that literally if I put on 2 trades, one of them is going to be a loser, and I know it going into it. So I have to accept that. I have to accept that there could be a loss. I have to accept the risk that that's going to put on my portfolio, on my goals. I would say over trading, trying to force it, letting your emotions get involved, that's a big part of it. And you have to stay present. The only thing that you can control is what's going on right now. You can't control what happened in the past or what might happen in the future. You can definitely, be prepared for what might happen in the future, but you can only control the present and what's going on. So as long as you're sticking to your routine and being sound with your rules and your structure, I think you can be very profitable.
I couldn't agree more. That was very well said. Aside from the day-to-day stuff, is there anything special that you do to try to stay healthy or decompress at the end of the day or on the weekends?
A few drinks never hurts.
Well, we had one right before we started the show, right?
That's right. That's right. Yeah, you got to loosen things up a little bit. It's very easy to get emotional with this because it is money, and because money has a very big influence on the way we go about our lives. But you have to look at this as a job you're trying to do and what your goal is. You want to have monetary goals that you're going towards, but in getting to those, you kind of need to break it down to, the process goals of either whether it's following your rules or, trying to not choke the trade or whatever it may be. There's always kind of bigger picture and then other little pictures you can draw within that to try and make yourself a little bit more profitable.
Now we're going to get to some bonus material here. Some lessons learned and growing as a trader, I think, is so important. It's something that never stops. And one of the ways that I do that is I read a lot. And I was just wondering, what do you consider to be 2 or 3 most important trading books you've read, or trading books that have had maybe the most positive impact on your trading?
I'd say there's probably really 4 that come to mind. 2 Jesse Livermore books, How to Trade in Stocks and Reminiscences of a Stock Operator. 2 books that I think are just absolutely fantastic. Doesn't matter if you're a seasoned trader or if you just got started. There's something you can continue to reread because you're always changing as a trader and the market's changing, and no 2 days are ever the same. And so, you're always going to have emotions reoccur or trades reoccur and stuff like that you want to stay fresh on those things. Those are 2 books that I love. Nicholas Darvis, How I Made $2 Million in the Stock Market, I think is a fantastic read for anyone that feels like they have to be there every second of the day to make money in the market. This is a gentleman who was trading from halfway across the world that was extremely profitable. And it just shows you that there really is a bigger picture to the market. That's great. And then also How to Make Money in Stocks by Bill O'Neill is a great one that just really kind of gives you a platform for why you should be buying the stocks that you should be buying. There's a reason why they're the best. And there's a reason why institutional quality names are the ones you want to buy. I've always said that the value of the stock market is very similar to the value going shopping. Let's say you're going to order a pizza, and you can order a pizza for $2 or you can order a pizza for $12. You'd love to only spend $2 ordering a pizza, but there's a reason why it's only going to cost you $2 to get that pizza, right?
Yeah.
It's not of that high a quality. And it's the same thing in the stock market. If you go around and start buying $2 and $3 stocks, there's a reason why they're priced that low. Whereas
that's a great analogy.
Something that's priced at $30 and above is there for a reason. Or, we look at some of the stocks we were just talking about leading the market up. We look at Netflix is over $100 stock, Amazon $500, Google is over 500. You've got Facebook, somewhere around 100, and all these names they're up there for a reason. Priceline over $1,000. I mean, Priceline didn't IPO at $1,000 and go up $100 since the IPO. It's been continuously bought into over time because it's that darn good. That many people want to own the stock, and there's that much demand for it. So that's something that's really been a huge influence on me as well, and a big reason why I like to buy things at new highs. There's a reason why that stock's hitting a new high. Something that's at a new low is there for a reason. People haven't been buying it, they've been selling it, and there's a reason why. And I want confirmation that that's really got an opportunity to turn around before I'm going to start getting into it for the long side.
William O'Neill's book is one of my favorites, and so are the other two, the Livermore and the Darvis. Those are three of my favorite books. They're real classics. I think everybody who's trading or wants to trade should be required to read those.
I've heard a lot of people say, just by kind of reading some of the books I've mentioned, everything really just starts to click. The light bulb comes on and you start to understand the way the stock market operates. It's not an easy thing. It is complicated, and most people lose money in the stock market. And the big guys who have all the money, who have the advantage to determine which way they go, generally are there to try and control the game and get the rest of us shaken out. And so it really does take some time. It takes some experience, and it takes some understanding that a lot of what's going on out there is reverse psychology of what you might normally think would make sense.
And you can get a lot of insight into all that by taking the time to read. A lot of people think that they can just jump into the stock market and be successful overnight, but it's like anything. It takes a lot of work and a lot of time and a lot of learning. There's so much material out there. I feel like one of the biggest obstacles to becoming a good trader is that there is too much information to filter through. A person can get started off on the right foot by reading the best books, by reading the classic books. They can bypass a lot of mistakes and losing a lot of money.
You just brought up a really great point. There is a lot of information out there and a lot of different ways that you can go about learning about the stock market. But if you just simply go out and look at who are the best traders of all time, just go ahead and Google some names and just see who comes up, or, go look at anyone who's set records in the market. Or, for example, Dan Zenger comes to mind to me. He's a guy who world record holder is setting, a crazy move in the market. Look at some of these guys who have really made the most money and look at the books that they recommend reading about it. You got to learn from the people who have been there and have done that and who have profited. Someone just giving you the tip at the cocktail party who, is just trying to cover their losses is probably not the person that you want to be taking the advice from. And you're always going to trade differently. Everyone has their own personality and their own way of trading. You have to figure out how you're wired and what the best setups are for you.
Exactly. Learn from the best and forget the rest. Because kind of a nice segue is, do you have any favorite traders, and what is it you like about them so much?
Well, let's see. Apart from you.
Oh, no. You didn't.
I would say there's a lot of people I look up to that I've been able to learn from in previous jobs I've had in the past that have been, I guess you would say, mentors along the way. But as far as people I look up to, I've done a lot with the guys that I trade with on a daily basis, that I stay in contact with, and we share ideas about what's going on in the market, and we talk about what we're seeing and stuff like that. And those are people that I really have a whole lot of respect for. Number one, because they put up with me on a daily basis. Number two, because, I know the profits they've made, and I've seen a lot of things they do, and the things that they do to help other traders is what I respect more than anything. And that's something I love about this whole happy hour stock talk, is that it's providing people the opportunity to learn something, and it's not going to cost you a couple $1,000s to do it. And you don't have to go, sit in some hotel conference room for a day or two. You get to learn this when you want to. It's up to you whether or not you're going to be profitable in it, and you have to put in the time. And there's so much going on in corporate America where you can be at the top of the food chain and you didn't necessarily earn your way there. And in the stock market, there's no way you're going to get to the top without putting in the time yourself. And, that's a lot of the people that I just share a lot of ideas with, that maybe they haven't written a book or maybe they haven't published their results or anything, but they've met their goals with trading. They've met their goals with combining their normal daily lives with trading. They're still helping others. Those are really kind of the people I look up to and I idolize.
So you found a group of other traders, and you guys basically knock ideas around and support each other and encourage each other and learn from each other.
Exactly. We just, we share it's once again, it's that confirmation. It's just, someone else is saying they see the same thing you do. And all that does is add a little bit more confidence and gives you a little bit more clarity. You're not going crazy, or maybe, a couple of beers you had last night doesn't make the screen as blurry as it seems. And I know the people that I talk to have a solid background in trading, and they look for similar things that I do as well. And that's a big thing. You got to surround yourself with people that have similar goals. And
Oh, that's so true. And it's such a positive a support group to bounce ideas off of. It's invaluable. And anybody who's trading should try to at least have contact with some other traders. And there's so many different ways you can do that. They have meetup groups, and you can go to seminars and things like that. And they do have chat rooms. And I'm a big fan of anything that's free. I'm so tired of everybody trying to charge people just to learn. I realize there is a lot of work that goes into trading, and people deserve to be rewarded for all their work, but there's so much information out there that I think should be available to people who want to learn, and it shouldn't have to cost $2,000 a pop. You know what I mean?
I agree. I mean, there's people out there trying to, turn a profit, with seminars or workshops or whatever they have for their material and stuff. And I understand if that's specific to your own way of investing, possibly, but if it's the simple logistics of how the market works and what certain indicators are and what they mean, I mean, all those type of things really should be free out there. And there are some great resources. It takes some time to find them and talking to other references to help you identify which ones are the best. But it seems like it's becoming a little bit better, and a little bit more often you're seeing a lot more free information out there.
That's good. Give the newbies an easy start, I guess.
Yeah, some confidence that they can find some support and they can find some education without opening a second mortgage on the house or something.
Well put. Well, what would you say have been some of the most important lessons that you've learned as a trader, or that have helped you personally improve your trading?
One big thing I always continuously tell myself is just slow down. Whether you're watching the market and you're watching these numbers move around so fast, or you're watching TV, which if you are, please turn it off. Don't, turn on any type of news network while you're trading. Let the charts identify things for you. Don't worry about what Kramer's saying or anyone else. I'd still watch Kramer. I think it's hilarious to watch him just because I entertain, but it doesn't influence anything I do with trading. But I would say, don't let anything influence you other than the charts and the fundamentals that got you to the point of looking at that stock. Please limit your losses. Like, don't ever take a big loss. It's so hard to fight back from. And the more and more that you put yourself in a situation with either an illiquid stock or something highly volatile, or in market conditions that aren't healthy, the more you just expose yourself to that type of possibility. Lastly, don't follow the way anyone else trades. Make a trade that's best for you, and that's going to take some time, and you can learn from other traders in the way they trade. But when you make a trade, make it because that's what you see and it's the trade that you want to make, not just because someone else is making that trade. I had a great example of an uncle of mine who made a trade because someone told him it was a great stock to buy, and the person was right, and he made a couple 100% on it, but the person never told him when to sell it. And it just kept coming down and down and down, and all this couple 100% turned into a couple 100% loss. And he didn't think there was ever a reason to sell it because the guy never told him anything. And you got to be able to think for yourself. It's way too easy to buy something out of excitement, but all of the money that's made in the stock market is based upon how you sell, not based upon how you buy.
You're so right about that. Those are all fantastic points and great lessons to learn. I think for me, 3 of the biggest ones I've learned: listen only to the charts. Don't listen to outside opinions. Don't be swayed by what other people are doing, and to always use stops. I've often heard not using a stop is like driving a car without brakes, and I think that's a great analogy. And the last thing that I've learned is our only job as traders, whether it's position, day, or swing, is to execute our strategies with precision. That's our only job.
Agreed.
And that means following the rules and having discipline and all that other stuff.
Much easier said than done, but once you get to the place where you have a routine and you admit to yourself what your plan is and what your goals are and stuff like that, it becomes a much easier process and something that becomes, second nature. You get to that point where you don't think about things, you just react to them because you're used to seeing what a good trade looks like, and you're used to seeing what a bad trade looks like, and you've put in the time, you've put in the work.
That brings us to our wrap up. Now, these aren't buy or sell recommendations. I'm making sure everyone knows that. But I was wondering if you could just share, do you have a few stocks on your watch list, and what about them caught your eye?
The way I'm currently trading in this current market is day trading. And like I said earlier, the things that I look for in day trading are the best stocks and some liquidity. So actually Netflix, the stock that we have up here right now, is one that I'm continuing to look at. I mean, we have it here on an intraday chart, but if I go to a daily chart, this is a stock that's still finding some support. It's still holding up nicely. It's above its 50-day moving average. If I click on a weekly here, you'll see that it's actually still holding its 10-week moving average. And in a stock market that's just gotten absolutely destroyed this week, this has done very, very well. And it's a huge sign of support. I mean, look at the trading range of this stock, and it's all the way at the top of the trading range for the week. There's a whole lot of people coming in and supporting that stock. So this is one I'm definitely looking at. Other ones that I'm looking at, Amazon is something that's liquid, that's still holding its 50-day that I look at and for day trading opportunities, or if the market does turn around. This is a liquid name that you really want to see institutions commit to, big cap names, if they really have a whole lot of vision for the market to turn up and make a big move. To the short side, Apple is something that I'm looking at. This is a stock that it's obviously changed its character. When we look at this on a weekly here, you see that this stock has had a pretty decent move over the last couple of years, and then all of a sudden we've really seen a big change in character here as it's dropped off and it's broke the 10-week moving average and multiple moving averages past. So this would be something to the short side. And also Palo Alto is a tough one. I mean, I would be looking to possibly be short on this stock because it's made a very nice move up here. We see that June of 2014 is really when this uptrend has started, and it's really held the 50-day moving average very nicely for at least the last year, and then it's most recently started to break. This would be something I'm looking for, but this stock really hasn't made as big of a move as some others. Some of your other ones that if we really do go into some type of bear market, your Apples and your Amazons and your Netflixes that have made these huge moves. We take a look at Netflix here. I mean, this is a stock that even just this year has gone up 150%, and now it's corrected 25-30% off of the highs, well, down to the lows more like 40 or 50%. But this is these are the type of names that have really had these quick, huge, big moves up that have been going up for years, that really have a lot of institutional money to dump out of them, that I would be looking to. So I would say for the short term, I'd probably be looking more to the short side than I would be looking to the long side.
I really enjoyed the stuff that you've shared, and I think it's a lot of great material that anybody who's truly interested in learning, especially if they're new to trading, they're going to get a lot out of. So thank you so much. It's been a lot of fun. We'll see you in the chat room.
All right. Thanks so much.
A very special thanks to our guests for being on our show. It's been a lot of fun.
We're in the morning. We've got a lot of what it takes to get along. We're in the morning. The skies are sunny. Oh man, depression, you are through, you done us wrong.
Learn more about trading at Tacoma IBD Meetup Group, where it's always free and it's always about becoming better traders.
We're in the morning. Come on, my honey.
Thanks for joining us on Stock Talk Happy Hour. Good fills, everyone.